I'm Brenda Butner, and this is Bulls and Bears, a special delivery from Uncle Sam. And it's early. Millions of tax rebates start hitting bank accounts this Monday. Will all that cash for Main Street deliver a new bull market on Wall Street? Let's find out in the trading pit. And here they are, the Bulls and Bears this week. We've got Gary B. Smith, Tobin Smith, Pat Dorsey, Scott Blyer, along with Peter Schiff, who is the author of the book Crash Proof. Welcome to everybody. Okay, Gary B. started off those stimulus checks. Are they enough to bring on the Bulls?
Well, I tell you what, Brenda, I think it's just going to be a continuation of what I think of the bull market that started back in mid-March. Look, you're taking 1% of the GDP, essentially, about 150, $160 billion. And even if you make the claim that you're moving it from 09 into 08, it's certainly going to pump up the economy in 08. People are going to go out and spend, that money. They might just pay bills or they buy coffee, whatever. They might not even spend all of it. But even if they spend half of it, it's going to have a significant boost. And I think it's really going to move the stock market up even further.
Well, but Toby, they do have to spend, and you don't even think 50% will do that much spending.
Well,
huh?
our research shows that probably only 30% of the money actually goes into buying stuff, number one. But remember, it's $150 billion, but it's going to the people who really don't pay taxes. 5% of the people in the United States account for about 70%, 10% account for about 70% of all taxes, right? They also are the most of the discretionary spenders. So you're putting in the hands of people who need the cash the most, and maybe they're going to buy gasoline, and maybe they're going to buy food, but that doesn't make the economy stimulate. What the economy and what the market is seeing is 2009. And they're seeing a very low bar for earnings. They're seeing an expansion, and that's what's making the market up. This thing, to me is...
So we don't even need it. Scott, what do you say?
Well, listen, those people, sure, they need the money because over the past couple of months, the economy's lost over $100 billion in retail sales. They've lost over $100 billion in increased gas prices.
March sales were actually flat, Scott. March retail sales were actually flat.
Going up to that. But now all of that money is going to go to keep things the way they are. Fill up your tank.
Because of inflation, because food.
Because prices have soared. All that money is just going to keep the economy where it is. But the bottom line is the stock market is going to do what Tobin's talking about. Look out to 2009. With or without these stimulus checks, the market is looking towards a better economy and back to normalcy next year.
Well, Peter, I know you're a really big fan of this.
No, I mean, first of all, why do you think we have so much inflation? It's because the Federal Reserve has to print money to keep the stimulus checks from bouncing. Hopefully what happens is Americans have the good sense to do the opposite of what the government is doing and pay back their debts that they already have. We don't need more spending. That's how we got into this mess. We borrowed money that we didn't have, and we spent it on things that we didn't need and we didn't make.
God, I finally agree with Peter Schiff. You're right. They are going to pay their debts.
And in fact, actually, it's our money that we're spending, Pat, isn't it?
Yeah, that's kind of the interesting thing. Really, you're just sort of borrowing from 09 and bringing it into 08, as people have already pointed out. I do think this is really just going to be a drop in the bucket. If you talk to retailers and restaurants, and a bunch of restaurants have come out with earnings in the past week or so, what they're saying is that, ex-California and Florida, which are big states, granted, the picture is actually not all that ugly. Now, that's a two-edged sword. On the one hand, it means the rest of the country is actually, not in the consumer Armageddon the market thinks it is. But on the other hand, it means that falling real estate prices do have a pretty big negative impact on consumer spending. So things stay ugly in real estate in the rest of the country. They could stay ugly in consumer land for a while longer.
But, Brenda, a lot of the retail stocks have already rallied in anticipation of that. So it's not going to help these stocks any further than what we've had over the past 6 weeks.
And remember, too, all we get is the margin, right? All the stuff that we're selling in these retailers are imported. We're just running up the trade deficit. If we stimulate any economy, we're stimulating the Chinese economy. Well, when Americans take the money that the Fed printed to the store and they buy something, the stuff wasn't made here. We just make the margin on selling it, but the real money goes to the people who produce it.
We are a global economy, though.
But actually, Gary B., the person who gets that dollar goes and spends it. It's that whole multiplier effect.
Exactly. And the other thing, Brenda, is I don't think the coffee at Starbucks is made in China. But, look, maybe, who knows? I guess it's in Kenya. But not every good and service we have here, Peter, is made in China. And the fact of the matter is, look, that money, even if, per what Pat and I were saying, even if it is moved from 09, it's not a drop in the bucket. You know, Toby said, oh, they're just going to spend it on gasoline and food.
But remember,
so what?
What
It's
about the cost
gasoline and food that they weren't going to have the money to spend on before. And the people that sell the gasoline and food, as Brenda points out, they're going to spend it on other things. So, yes, it's got to be stimulus.
All right.
What about the cost of providing the money? When they print money, there's a cost associated. Prices are rising because the Fed is printing too much money.
If this is
not the point.
If this is a really good idea, then why didn't we do $500 billion?
Exactly.
I mean,
why
that's why I'm a little confused.
We may well do that.
Well,
okay, Pat, go ahead.
I was just going to point out that Scott's point about a lot of these stocks already discounting this is a very good one. I mean, if you look back at the rebate that happened in 2001, a lot of it was spent actually on restaurants, not on goods. And if you look at a lot of restaurant stocks right now, many have rallied 60 and 70% from their January lows. So I would say any stimulus, price them.
Well, in New York, you're going to take that check, put it on the bar, and say, you know, give me an hors d'oeuvre and a cocktail. I'm in.
I qualify for this.
Especially South Frisco.
Not everybody lives in New York. All right, Peter, do you have anything positive to say about this at all?
About the stimulus checks? No, not at all. It's just going to stimulate more inflation, and it's another reason to get out of the dollar, to buy more gold,
let me
to
ask
get your
you
money
about
off
Wall
these.
Street then, because actually the market was up last week for all the major market averages with oil at near 120
I don't think it has
bucks.
anything to do with the stimulus checks. I mean, you know, we had a big drop. I mean, you have some shorts who are covering. People are getting optimistic now. They think the dollar is bottom. They think our problems are behind us. They're not. The bulk of the problems are still in front of us. We're still in a bear market, and these stimulus checks aren't going to change it. Who's laughing?
Okay, well, you know.
I am. At you.
Yeah.
All right, well, now that we feel very cheerful, we can go on to our next segment.
I've never made a bad call, Peter. All right, excellent job.
Thank you. All right, that does it for the Trading Pit this week. Coming up, sell in May.